Hey everyone, me Kevin here. We gotta talk about a Tesla stock and my price target. Now, we've talked about my price target last week, and a lot of folks are like, Kevin, this price target seems low. And I wanted to clarify something that's really important about a Tesla stock. But before I do, I want to offer a moment of silence. A moment of silence to Jim Chanos, who is a legend for shorting Enron, but then shorted Tesla and basically went from multi-billions of dollars in assets to under $200 million in assets and ended up deciding to close his hedge fund. Now, something interesting about this individual as well, and I remember this really clearly. You might or you might not, it depends. If you were paying attention to the AMC news, you might remember that when AMC offered the APE, the AMC preferred equity units, I'm like, no, I don't like this, I don't like these at all. Everything was just written really nasty and basically set up to screw the retail investor. AMC is undertaking the most brilliant move I've ever seen in stock market history, and it's literally designed to screw people who just don't read the fine print. That's exactly what ended up happening. Now, unfortunately, I got a lot of hate for covering that. In fact, look at this, 69% dislike ratio on that video, even though it ended up being right. But what was really interesting was people were referencing a Jim Chanos interview where when those APE units came out for AMC, he said, oh, short AMC, buy the APE units because they're basically the same. So the APE will go up and AMC will go down.
And just calm down, apes. I'm actually an AMC security holder on the other side. We actually bought the new ape preferred and we have shorted the AMC common against it. They are economically the same security.
And I'm like, no, bro, they're both gonna go down. In 6 to 12 months, I expect ticker symbol APE will be worth $1 or less. That would be an 86% decline from today. No, I don't want to laugh to cheer at the demise of AMC or what has happened. I want AMC to be able to transition and succeed. Hopefully T-Swizzle can help them out a lot. And obviously this is an AMC video, but it's very interesting to think that this is the same dude who was short Tesla, was also totally the person who misinterpreted and misunderstood what AMC was doing. And I'm not here to say I got it right on the APE units, but that is what happened. Now, the reason I bring up this AMC talk regarding Tesla is that clearly this person might be missing some very clear indicators when he invests in companies. Hence, in my opinion, why going for closing hedge funds. Because if he really believed in his theses, he would say, no, he'd pull a Cathie Wood, right? This is an opportunity. This is a chance to double down on the shorts versus Tesla. This is a chance to double down and be twice as right. That's a way of saying, like, for example, if you believe in interest rate sensitive stocks like Tesla, which I imagine you probably do, I certainly do. It's my largest position. It's the biggest position in my actively managed ETF. I believe in, let me put it this way. I believe in Tesla so freaking much that I'm willing to pay for an actively managed ETF and put whatever I can into that actively managed ETF. So that way, when Tesla booms, I can rebalance it as if it's in a Roth IRA without tax implications. Now, I have to be careful there. I don't want to get in trouble. Basically, talk to your CPA about the tax benefits of ETFs. You could trade in them, sort of like you're exchanging real estate, but that assumes that you have gains, right? So anyway, the point of all of this is just to say, I'm really bullish on Tesla. That's why I'm building everything in that direction. And I double down on the bullishness of Tesla. I double down on the trades I make, whether it's chips or Enphase or whatever. And I realize in the painful times, it's like, oh, Kevin, I get it. But I think this is a great opportunity. So this moment of silence now to be had for Jim Chanos, the person who got the AMC debacle wrong and a short Tesla, let's just say, I think is a transition point to the start of Tesla actually crushing it. So, moment of silence. to the moon. Now, we need to talk about Tesla because, look, last week we went through my spreadsheet. We went through a very, in my opinion, conservative estimate. What I said is let's remove everything that is Tesla, basically. Optimus, Dojo supercomputer, FSD, Robotaxi. We're going to call energy above 10%. We're going to call all of that the icing on the cake. That is your margin of safety in Tesla. You don't want to start calculating and pricing in everything that the company has, because then when something goes slightly wrong, you suffer, and then it's like you miss expectations. And that. I like to go shoot low. So I'm going to take all that out, even though some of those things like Optimus could end up being more profitable than autos in the future. You get a functional Optimus that could sit in a factory and do something for you over and over again. They're going to sell out the Optimus robot like there's no tomorrow. I am highly confident in the future of robotics. If I had enough money to create a startup, another one, okay? We're going to turn into DJ Khaled. It's going to be like, Kevin, another one, hopefully. Because what we want is to make sure they're all a success as well, right? You don't want to get distracted and have not success. Fortunately, HouseHack is off to a really phenomenal start. So, if I was going to create a startup, the startup that I would create, and I had the money to do it, would be, and it was outside of the real estate startup that we're already doing and the finance startup that we're already doing. It was outside of those. It would be in robotics. It would be to try to make the Optimus robot to compete with Tesla, because I think the market will be so huge. So my analysis removed all of those hopes. And I said, I think, just solely based on that, this is $1,000 stock. And there were a lot of comments of people like, Kevin, that's not bullish enough, man. Man, that's way too low, man. I'll be disappointed if it's only $1,000 by that point. Okay, whoa, wait a second. I should have, and I'm working on this. My communication wasn't as clear as it should have been, at least apparently, based on the comments. That is a very conservative $1,000 estimate, based on removing all of the rest that I think will be very profitable for Tesla. And if you paid close attention to the video, I said I think that $1,000 price target will actually be hit within the next year. That's because I think we're going to see over the next year, as interest rates come down, as long as we avoid a recession, we avoid massive job loss. I think what we're going to see is a shift from treasuries and cash straight into stocks. And it'll be growth at any cost again. And I actually believe we're going to see massive euphoria again. Now, I can't guarantee we're going to get to $1,000 with Tesla. I can't guarantee you're going to make money investing in Tesla, okay? I'm not your personal financial advisor. We know this. But this is an opinion that I have. I really believe there's a chance we could go for $1,000 once the economy goes from fearful about recession and high interest rates to transitioning to we need growth at any cost. There will be a disproportionate explosion in those stocks, in my opinion. One of the reasons you see stuff like this happening is, look, you've got Resident Bear Kabisi letter here or whatever. First outflows from treasury funds since February of 2023. Okay, so what did they buy? Investors purchased $24 billion of stocks. Okay, imagine when all of this fat turns into buying stocks. We're just at the beginning. There was another one right here. U.S. commercial bank deposits fell. Right, because people are buying stocks. It's getting started. The more the disinflation narrative holds, and the more people realize it's not just a narrative, it's a reality, the more people buy stocks. So, okay, let's be clear here. Between now and the end of next year, I think the stock market will start pricing in 2030, which means we price in $1,000 just for the automotive business. Now, what's going to happen is I think people are going to price in Cybertruck scale. Look, I want to be very clear about CT. I think the Cybertruck event will be a short-term buy the rumor, sell the news. Cybertruck gets delivered. They'll only deliver like 5 or 10 cars. They'll deliver them to employees only. People are going to be like, what? We thought you were going to deliver like 500 or 1,000 by the end of the year. This sucks. Then those are going to get out on the road, and You know, people are going to take pictures of them and go, oh, panel gap this, or a Cybertruck's going to get into a car accident. And there's just going to be a lot of negative Nelly news in the short term. It's all like legitimate FUD, fear, uncertainty, and doubt. This vehicle, I strongly believe, obviously can't guarantee it, will be a massive catalyst for Tesla. And so what you're going to find is at the same time as you get this pricing in of 2030 price targets next year, you'll actually be getting Cybertruck ramp and broad mainstream Cybertruck adaptation. People who are today like, oh, look, a Rivian, damn, that car looks good. They're going to be like, damn, look at that Cybertruck, I want one of those. Especially if the price is right. So near term, bearish, long-term bullish on the CT. But then what you're going to get is after you price in the 2030 only automotive price targets based on CT excitement, that's where we're going to get a little dangerous, because I think we're going to get into euphoria. And I think you get into euphoria where people are going to start saying things like, we need a price in Dojo. We need a price in Optimus. They were able to pull off the Cybertruck. That's it. Optimus, $10 billion now. What, $1 trillion of revenue in 2040. And you're going to start seeing that pull forward where you can actually blast through that $1,000 PT. Also, I want to be clear on the flip side, just to sort of balance this video, because I have to be careful just like implying that I'm only to the moon bullish, although that is how I am positioned. Okay, my positioning aligns with that. I want to be very clear, I do not think we are revisiting the lows that we had last year. I think this was the fear of Paul Volcker and the fear of vehicle bankruptcy. I do not see us repricing this in. Looking at the fibs, everything we've seen here, entirely reasonable. Bouncing off the 200-day moving average, entirely reasonable. And that 200-day moving average is very consistent with what I like to call the Nike swoosh. The volatile Nike swoosh. The volatility is what we see on the day. The moving average is obviously the not volatile part. So that's my take on Tesla. I want to be very clear. When I said $1,000 2030, I think that's going to get priced in way sooner. But we'll have to be careful because we are going to get to euphoria again, in my opinion. So again, very clear, it's my opinion. I'm very excited. Moment of silence for Jim Chanos. Cybertruck's gonna be awesome. We'll see y'all soon. Thank you so much for giving me another chance if you've been thinking about either unsubbing or you're not certain about subbing. I'm doing my best.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.